There's a bit of lithium going on in today's episode, Ricardinho. Azure Minerals, potential change of control.
We can pretty much be certain that it's an offer is coming from SQM on this one. The big winner in all of this, Matty, is big Mark Creasy.
They haven't even got a resource yet. In the billions of dollars of bid for a deposit that doesn't even have a mineral resource estimate yet. It's
Wildcat.
Wildcat.
I'll remember that next time.
The headline number is 85 metres at 1.5%, and this one, unlike previous headline numbers, is drilled perpendicular to the ore body.
The AFR reporting yesterday that MinRes has been sounding out investors of Wildcat to buy shares off market. I got another question for you, Matty. Do you think it's a good or bad thing for a lithium developer to have MinRes pop up with a 15% shareholding in its stock?
Righto, g'day money miners, back for another week, 23rd of October, Ricardinho Monday. Bit going on today, mate. Azure in a trading halt for a change of control. Have a guess who that might be with.
Wow, mate, and they're not the only lithium player out there with some big news today.
There's a bit of lithium going on in today's episode, Ricardinho.
Big time, mate. Wildcat.
It's
Stonker.
Wildcat.
I'll remember that next time.
Thanks, mate.
Wildcat. I hear that's catching on around the terrace, which is good to know, Matty.
On plenty of WhatsApp messages, mate. And we'll go into the Liontown funding. Well, I don't think we've actually released on Money of Mine yet what the actual funding arrangement was after all our spitballing about it.
Mm-hmm. So, yeah, and then we've got some other stuff develop, SQM, Pirra. So keen to talk about it all with you, Matty. And you're back. You're back from your BD session down south.
Burn this bloody... Mate, tell you what, we know I like a bit of BD, Travs. I went down for the Southwest Connect, but on day one, like my commitment to the Money of Mine team and the Money Miners is that I pumped out 24 hours of BD in a row.
So, was it actually like a full 24 hours
shift, night shift
stint, or did you...
Full 24 hours.
Did you squeeze 24 hours worth of BD into a normal 12-hour day?
Squeezed 24 hours of BD in a 24-hour period. Just went like when the Prime Minister's on the bloody campaign for the final vote, mate, doesn't go to sleep. That's what I did for the Money Miners, mate.
Hold on, mate. I'm glad.
Good times.
I'm glade we have complementary skill sets because I would not be putting my hand up for that one, but I'm glad you did.
Happy to help, Money Miners. Paid for it the next day. Yeah. Anyway, right, Trav, let's get it, mate. The sponsors for today, you'd say the sponsors for today are Money of Mine.
I'm going to try something a bit different, Matty. So
let's mix it up.
Bear with me on this one. This is a pitch to you, the listener, the Money Miner. So hear us out here, right? I'm keen to talk about the merit of becoming an advertising partner with Money of Mine. Matty, we embarked on this a bit over 6 months ago now, you, myself and Jonas all together, and we're building a media business providing commentary on the industry we all love.
Love it. Love the mining industry.
We do. And we've taken a bit of a different strategy building out this business than you've typically seen out there from the incumbent media landscape to date.
Is that like taking money off everyone?
Or avoiding taking money off everyone?
Or avoiding taking money off everyone. That's we're trying to avoid.
I think you speak around to a lot of our listeners, and there's a few common themes. People love the diversity of that we bring in terms of just like our different backgrounds and put it all that together. Another common theme you hear when you ask people what they like about our show, it's the fact that we're independent. We're sort of unencumbered from who's paying us money perspective. And if you look around in the industry, one of the unfortunate realities is that everyone seems to have a conflict of interest in some way, shape or form. And frankly, the absence of quality, unbiased commentary was a big motivator for us to build the business that we have in this industry. And I think that informs our intentional decision to avoid monetizing our business by accepting money from the kinds of companies we talk about in exchange for coverage.
The subconscious bias, as we say, Trav, as soon as you talk to someone, I'm like, oh, geez, that's a good bloke or a good Sheila. I won't talk bad about their company. Yeah. We want to avoid that. Well, we are avoiding that.
We're avoiding that, but we're avoiding even, that's subconscious bias. We're avoiding bias because you're paid to promote, and that's just not what we're doing. So as we grow, right, we still need a way to keep the lights on. And so we've brought in advertisers. And we've been really thoughtful about our advertisers. You look at them, They're industry adjacent service providers. Think drilling companies, power solutions, recruiters, exploration services, fund managers. They aren't speculative ASX listed mining co's that require equity capital in order to stay alive. They aren't stockbrokers. And that decision has been deliberate. We want to bring you, the money miners, our views and analysis unencumbered. And we're keen to bring on more sponsors who provide industry adjacent services into the mix. So if you run a business that provides services in some way, shape or form to our industry and you like what we do.
As in, what we do is not do pre-recorded ads and play the same one every time. It's from the heart every time we present a sponsorship. Money miners and businesses out there.
100%, mate. And so I've made a list of pros and cons.
Oh, here we go. It's like a bit of a SWOT analysis.
This is why you should inquire to become a Money of Mine sponsor. On the pros list, Matty. Pros. Number 1. Matty will personally call you a GC on a regular basis.
You have to be a GC, and that's like, is that part of the...
It's a minimum threshold.
Threshold, yeah.
Yeah. Number 2, advertising with us is literally the most effective way to reach the actual decision makers in our industry. The MDs, the board directors, the C tiers, they all fucking listen to the show.
And they're actually the top percentage demographic on job title on the LinkedIn following when you see our post analytics is managing director.
The number 1 job title of people that engage with our content, MDs. So you reach them directly, them and 8,000 other people every single day listen to our show or watch it on YouTube. And it's a hyper-targeted audience, right? Number 3, our ads are unique. Like you said, Matty, they're entertaining, they're memorable. There's nothing like them out there, and we say them in our own voice. And number 4, we intentionally stick to 1 ad per show. We don't want to dilute the product, and we don't want to dilute the ad. We want to go nuts giving our best to the advertisers that pay us. Hence, we do 1 ad per show, and it's funny, it's hilarious, it's part of the entertainment value. On the con list, Matty.
What's the cons, mate? I'm interested to hear these.
I had to really think thoughtfully about this because I don't think there's too much downside advertising.
There probably is one.
There is one. Matty might get so passionate calling you a GC that he actually forgets to explain what your business does.
Sorry, Terra Capital and Anytime Exploration, NK Draw, and pretty much everyone. They get to the end like, what's the company actually do?
Yeah.
Yes, get in touch with us.
Yeah.
Matt@moneyofmine.com or Travis@moneyofmine.com or we've got to change JD's email.
It's
Jonas@moneyofmine.com. But the thing, and after talking to the people down at the conference, Trav, Southwest Connect, cheers to Vertical Events for flicking us a ticket, and is the way I explained it, and people said, what's your competitive advantage? And listening, talking to me in public, and talking to you in public is exactly like talking to us on the show. That is our brand. We don't put a corporate cover on. No. This is us. This is how we are. This is what we want to do. And the way we like to analyse everything is just like you're having a convo with your mates, talking to stock. Mm-hmm. And that's what's going to separate us in the field, Ricardinho. So
agree, mate.
Get in touch. So, mate, good prep there. I was just going to send it. That's why we work well together, mate.
Complementary skills, mate.
Sensational, mate. Right. Azure Minerals, AZS. They're in a trading halt pending an announcement. They went into a pause in trade and now a trading halt regarding a potential change of control. Now, I don't think it would be anyone other than SQM. Haven't got any word that confirmed it is, but look, 20% shareholder. She's pretty much a bloody guarantee. Yeah, and
we should talk about why, right? So I bring up here like Azure's major shareholders. You've got SQM with 19.9%, Creasy Group 13.2%, who marginally increased that last week from memory. Then Deutsche Balaton / Delphi, the Germans, with just under 11% there. So the way to interpret like that share registry is you need SQM to be on your side in order to get a deal done. If SQM doesn't agree, you're not going to get a deal done, which would lead you to think that like the 19.9% stake, it's such a deterrent to anyone else to kind of come in over the top because SQM obviously they're going to need a massive premium in order to accept because they've got the other they've got a strategic interest in that stake for a reason, right?
Same as Gina with Liontown.
Exactly.
And they're a bit different because Gina doesn't really have a price. So for those that don't know, we're talking about the Andover Lithium project up in the Pilbara in Western Australia, and Azure own 60% of the project, and Mark Creasy, or the Creasy Group, owns 40%. But as I said, Creasy Group owns 13.2 of Azure as well.
Yeah,
so,
and Creasy's 40% is free carried. Plus the other reason why we can pretty much be certain that it's an offer is coming from SQM on this one is because SQM previously chucked in a bid, which is public knowledge, as confirmed by Azure. So
and knocked back.
Knocked back, yeah. That bid was at $2.31 a share. Azure confirmed they received that bid, and the bid was submitted on the 12th of July 2023. Now, the stock ran all the way up to $2.96 on the speculation, and then Azure ultimately announced confirming that they'd received that bid. The big winner in all of this, Matty, is big Mark Creasy, right? So let's...
Absolutely. He was already winning with the free carried interest. Now...
Oh, it's the icing on the... there's just... He's going to be a massive winner here.
And let's just make it clear that before we get into why he's winning so much, they haven't even got a resource yet, this company. Like, this is a plus in the billions of dollars of bid for a deposit that doesn't even have a mineral resource estimate yet. It's just got an exploration target of 100 to 240 million tonnes of lithium between, I think, was it 1 and 1.5%, I think. So it does not even have a resource.
Doesn't even have a resource.
Phenomenal.
And it's not even like you're acquiring 100% of the project. There's still a partner there in Creasy. And the fact that SQM are obviously, well, we're assuming SQM, but the fact that they're wrapping up a deal with Azure first rather than tidying up anything with Creasy first, probably just worked out that way from the negotiation perspective. But like, think of Creasy, right? He will get a payday as a 13.2% owner of Azure here, and then is free carried on that other 40% until FID. So any funding on that, all the resource drilling, all the infill drilling, all the studies, all of that is going to be funded by SQM. SQM will benefit in some sense being the operator at that stage, assuming they get 100% control of Azure. But the dynamics of Creasy. Think about Creasy. He doesn't have to do anything. There's no funding pressure, nothing like that required, and value just gets added to this project over time by SQM's dollar. So, for Creasy, he's kind of got no incentive to necessarily consolidate or fold in his remaining 40% share anytime soon, unless he took a contrary view on the lithium market. But he can just sit there patiently, relaxed, and the value of his 40% grows.
Yep.
And then SQM, maybe around FID, they look to do a deal, and Creasy can kind of talk turkey then. But mate, like, think about that 40%. If I was a hungry investment banker, you know what I'd be doing? I'd be pitching to Creasy to IPO his 40% interest. You could free up more of his capital if you wanted to allocate it elsewhere, but he still remains in the controlling seat there.
Right now, so what the deal's worth about? So what their market cap at the moment's a bit over $1 billion at $2.44. So let's say mid threes. That's about $1.5 billion for the Azure stake plus. So that's valuing the project at about $2.4 billion if you include Creasy's stake. Before it even a mineral resource estimate. So it's
pretty remarkable, right? Yeah, there's there wouldn't be too many deals in resources history, at least, that come to mind for me, where you transact at such a big gross number in the billions pre-resource. Like, I'm sure there are deals that have happened that just don't come to mind to me, but people who are kind of across the history, I'd love a list of the big deals that have done pre-resource, because it's such like a it's a novelty to sort of see this stuff as an observer of deals. But let's speculate.
Nice and close to a port. No, it looks like a pretty simple open pit coming up. It's it's a good it's going to be a good little project. What do you reckon about the price? It was said mid threes.
Should we take a punt on price, party, and sort of conditionality of the deal?
Well, I'm not betting against you on SQM. I think
SQM,
that's has to be.
My guess on price. So I think it traded as high as $2.96 in the past, and people always, for whatever reason, get anchored to all-time highs. So my guess is $3.50.
So if I'll
What would you guess on price?
go $3.52.
All right.
Because then if I'm over,
I like it. And what about any conditionality? You just think it's subject to DD, or do you think DD's been done, mate, and it's low
did they do
conditionality?
DD on the last? No, because they didn't get let in the door, did they?
SQM?
But they've been involved for a long time now, so you would think some part of what DD is there to do? Really, there's no mineral resource. It'd be you think they'd be pretty up the curve on what's going on since they were the early investor before the big hits even came out. So, but as say it's $3.52 for instance, what that means that 40% of Mark Creasy's will be sold at a minimum of $3.52. Isn't that a bargaining chip in the future for him?
Well, the strange thing, right, is it's not as simple as saying if the 60% goes for X, then his price is the inferred value for 40%, because his 40% is worth more than the equivalent 40% in Azure shares because he's free carried.
For drilling.
He's free carried, right?
Yeah. So the only time that it'd become equivalent is after FID.
However, that analysis is absent the fact that Creasy is not operator, so there is a premium for an operating interest in a joint venture, in which case it always has operational control. But still, nonetheless.
So do you think, so if you add all that up once FID, like say before FID, what do you think Creasy's value of the 40% pro rata will be over or under Azure's?
Oh, it's worth more, I think, just because of like how many they're going to spend $200 million drilling this thing out.
Yeah, and what about after FID?
After FID,
so like because
after FID, then it's less
should be
because
par.
Yeah, exactly right. Well, it's less because it's a non-operating interest at that stage versus
so you
interest.
pay a bit for the control.
Yeah,
right. Yeah. Very good, mate. Right now, let's continue in the Pilbara region. Ricardinho, Wildcat. Big old drill it today, WC8. So they the headline number is 85 metres at 1.5%, and this one, unlike previous headline numbers, is drilled perpendicular to the ore body.
Looks true width. So,
a bit, I think it's about 150 metres.
133.
133 from the collar on the way down. So 85 metres at 1.5, thick and high grade. It's the Leah pegmatite. I don't know how we pronounce that properly. So, yeah.
We can flash up a section on screen. You can see where that hit occurred. There's assays pending on two more holes that you can see on this section. That's the holes TARC 148 and TARC 161 AD. Both of those holes, which have assays pending, logged about 146 metres each of pegmatite. And since I'm not a geo, Matty, I'm going to shut up now before I completely embarrass myself.
Well, you look at that one that's 150 metre section would, if that comes back with the bickies, that's going to be opening up a pretty significant style mineralisation at depth. So
yep, the stock's up 29% today to all the way up to 60 cents per share intraday. The market cap, is pretty hefty.
So it's 614 million now undiluted, but then I'm pretty sure it's about 50% on top once you fully dilute it with all the oppies and everything. So is that would that be that's correct? Yeah, it's 50%, pretty sure.
Yeah,
around about.
There's still the share count that you kind of see looking at is still not the share count that kind of factors in some shares that have been proposed but yet to be issued or quoted. So just keep that one in mind. You can see, So the AFR reporting yesterday that MinRes has been sounding out investors of Wildcat to buy shares off market.
So a bit of a double whammy today.
Yeah, exactly. That 29% jump is factoring in both the drill hit and also the rumoured corporate interest. And I don't think that should come as a surprise, right? MinRes' strategy has pretty clearly been to acquire strategic stakes in almost all of the WA lithium developers. Interestingly, Wildcat is the one which is unencumbered by a strategic interest to date, at least that we know of.
I suppose it hasn't been around for long. Yeah, it's probably a time thing.
Yep,
So
potentially.
only very new to the market.
Well, the fact that we're about to see a change of control in Azure, which doesn't even have a mineral resource, tells you everything you need to know about the corporate appeal of these assets despite their early stage, I think. And I got some interesting history about Wildcat for you, Matty. You might enjoy this one, knowing that you're an avid fan of irrelevant history.
Love history. You'll make it relevant for me, Cobber.
So Wildcat's acquisition of Tabba Tabba completed last week through a deal with Global Advanced Metals, call it GAM. GAM is owned by RCF, the private equity group. James McClements is the managing partner of RCF. James McClements is also on the board of MinRes. In 2016, MinRes purchased Wodgina from GAM. In 2014, GAM sold Pilgangoora to Pirra Minerals. GAM also retains the tantalum circuit at Greenbushes. So all of those assets, including Tabba Tabba, once upon a time were Sons of Gwalia. Yeah,
very good.
So Tabba Tabba was the last one to be dealt out, and it's now ended up in Wildcat's hands. And I had this thought: given James McClements is on the board of MinRes, I wonder what Chris Allison's attitude was on the news that Tabba Tabba was going to Wildcat. I'm sure Chris Allison would have loved to have picked it up himself, sort of before it found its way to the public boards elsewhere. But nonetheless, I got another question for you, Matty. Do you think it's a good or bad thing for a lithium developer to have MinRes pop up with a 15% shareholding in its stock?
As a shareholder or a company?
If you're a shareholder, and then MinRes pop up there 15%.
I think we've seen in recent times, if you're looking for a bit of a takeover premium or lift in your share price, having MinRes on there taking control mightn't be the way to get it. Look at what happened with Delta Lithium, for example. They paid a 30%. Well, they paid the hefty premium to gain that 15% shareholding, but now they've got 2 board seats. They've got control without having to cough up a premium to take 100% of the company. So I think as a shareholder, seeing MinRes come on is, it's a bit. It obviously shows the interest is out there, but are you going to actually get the full premium for a transaction?
It's a really, really interesting point, I think, because normally when you're a company and a strategic party takes a minority interest in your company, it's validation, it's corporate interest. You start to think, oh my God, is it going to be a contested takeover? How good's this? And I think the prevailing view in the market at the moment is that a lot of these lithium developers that where MinRes are kind of marking their territory with the 15 to 20% interest. We're not actually seeing that materialise in a takeover offer of these companies. They're actually just blocking stakes everywhere potentially. And in some ways, it's MinRes. I think they're preserving all of the optionality themselves. And I think if they've taken a view that WA is going to have a big lithium province in the future, then they're doing their best to kind of ensure that they're at the heart of all of that supply, without actually doing the full takeover of any of these developers yet.
Do you think that MinRes are going to use vessels like Develop, for instance, to look at what's happened with Essential? MinRes had a 19.55% shareholding in Essential. Develop has now taken over Essential. MinRes have approved that. MinRes are also a shareholder in Develop. Do you think without MinRes having to take over a lot of these companies, they'll use other vessels that they have interest in to then use the voting power to then approve those takeovers? Is there any benefit in that? Or if they don't do that, what's their play here?
Maybe, but I see Develop getting that as kind of just net. MinRes still keeps a minority interest in the ultimate owner of it, except now it's in the hands of someone with actual kind of development capability. So it's just a benefit for MinRes while they still maintain a stake. But how do I think about MinRes and all its positions? I just think it basically prevents someone else from someone else from popping up. Like if these iron ore magnates have taken the view that lithium is going to be the next, iron ore, then what's happening right now is, the huge winners of the iron ore game kind of were the ones with the best deposits and all that sort of stuff. In this case, it looks like MinRes is just trying to hoard all the rocks.
Yeah, but if you look at the way MinRes is with their JVs, so Wodgina it was 40-60, now it's 50-50 with Albemarle, and then they had the 50-50 JV with Ganfeng at Mount Marion. They obviously had the downstream JV with Albemarle at Kemerton, but then sold that to increase the Wodgina stake. So previously MinRes were using these big organisations as JV partners for, to assist with funding. But you imagine now if MinRes has got a lot of controlling stakes in plays like Wildcat, Mount Ida, now it's I guess you'd say it's part in Essential with Develop and things.
So there's Global Lithium.
Yeah, Global Lithium. And then you've now this little the theory that's going around for a while now is this Superco with Gina, this Australian lithium spin out. If that happens and they've got control of it, Chris Ellison doesn't need JVs with any of the big four lithium companies anymore because he's going to have Gina's funds to back the whole thing. So it's a way to this lithium. I think it's really setting up for that little self-fulfilling prophecy to come true.
Yeah, and you can see the public rhetoric from Chris when he does his calls. There's this prevailing view that guy with the rocks sort of has wins. We're not going to be short of downstream capacity. Where like the real kind of pricing power comes to the hoarder of the rocks. Hence, the strategy is to hoard the rocks.
Yeah, and look, I think this is a testament of where the Australian hard rock lithium industry is right now. So you've got, as I said, we've got Azure getting a takeover for valued at about project value of about two odd billion, if it's 350 or 352. Before a mineral resource, they were, companies like this are buying into companies like that just to try and get lithium supply. So it is a hot thing at the moment, isn't it?
Yep.
Oh, good times. Right. Now, may as well just stick to lithium and Pilbara. This one was an interesting one as well that popped up today, Trav, where SQM are also involved. So SQM have taken a 40% interest in Pirra Lithium. Now, Pirra, you won't find Pirra Lithium on the ASX. It's a private company, and it controls 8 kilometres of the Tabba Shear, and that will sound very familiar to money miners because we just mentioned it with Wildcat. So they've got tenants. So the Tabba South is about 20 kilometres from Wildcat's recent lithium discovery that we just talked about. So this Pirra Lithium was the private spin out from Calidus and Haoma Mining. So we have talked about Calidus and Haoma, how they did so. I think it was a couple of years ago, or a year ago. They spun out the private lithium business for the lithium rights for those Haoma tenements.
And Pirra hasn't made its way to the ASX boards yet.
Private.
Yeah. So you went into the details on this one.
Okay, so how SQM, there was these additional tenements that were identified by SQM, and these are the ones that are owned by Haoma. So there's Haoma are also a private company. Okay, so the transaction is, now remember that at the moment, this Pirra Lithium is 60% owned by Haoma Mining and 40% owned by Calidus. So how it works, Haoma are going to vend the lithium rights of these additional tenements, and we'll show them on the screen, vend them into Pirra Lithium, and Pirra's just got to spend $500,000 on exploration in 18 months. Pirra then issues $7.5 million performance rights to Haoma, which are convertible on a JORC resource coming out of greater than 20 million tonne, greater than 1% lith within 3 years. SQM then enter a share sale agreement with Haoma for 30% of their stake in Pirra. So remember, they own 60. So it didn't say what the value of this 30% sale was. It says 30% of their issued capital in Pirra. So, it and then it says SQM then subscribed for another 3 million in Pirra shares at 20 cents to take their ownership up to 40%. So it sounds like the 3 million's for that final 10%. Not sure what they've paid for the 30. If that's money miners, let us know if you do.
That's right.
I'm confident.
And then you can see so Calidus also tipping in $2 million at 20 cents
to retain their.
They don't want to get
40%.
diluted, because new shares have been issued to Haoma. They don't want to effectively be diluted, so they're tipping in more to keep a 40% interest in this.
But then interesting, Haoma then subscribe. Calidus are doing a share placement to Haoma for 2.3 million shares at 14 cents for $330,000. So, which is a bit interesting, bit of working capital there.
Wow, I missed that detail.
Yeah, that was another bit. So, and because obviously Calidus are under a bit of balance sheet pressure and they're tipping 2 million here.
Jeez, there's a big circle of money going on.
Hence why that confused me thinking about trying to figure out what they paid for the 30%, but it doesn't look like it's disclosed what SQM paid. So then, and you look at this picture here, so you've also got the old right adjacent to this additional tenement that's being vended in. You've got the old De Grey lithium hit. We also obviously know De Grey for gold, but back in 2017, they hit 17 metres at 2.5% lithium. Looks great. That's bloody good grade. And the question is, why wasn't it followed up? But if you look at this section of the announcement, you see the dreaded L word, lepidolite and pedalite with minor inclusions of spodumene. That was from their rock chips, but then so it sounds like that De Grey lithium bits are riddled with lepidolite throughout, and not a pure spodumene joint. So
the lepidolite and spodumene often go sort of hand in hand.
Yeah, and I think it was just more than with minor inclusions of spodumene. Yeah. So. And I think they did release, there was a 2 metre section which was a rich spodumene section, but it looked like the rest of it was a lot of lepidolite, which as we know, is not as easy to process as spodumene, and it's something that you have to pretty much ship off as a DSO to China.
Mate, what a well-timed announcement this one is, given the fact that SQM are in the news for potential change of control of Azure, and bloody Tabataba's in the news as well, and they've called this thing the Tabataba Shear. So it's really leveraging some existing news flow to come out today.
Well, I think everyone will be asking as well, is Wildcat's lithium got lepidolite in it as well? But you look at the assays here, Trav, I've dug in, no significant intercept for all of the assays that are returned for Wildcat. So it's not the same as the De Grey hit. So yes, a lot of very, very interesting. Mostly because you've got SQM getting in twice. Now you've got MinRes going into Wildcat. It's all within the same area. There's going to be it looks like there's a pending fight for control for this Pilbara lithium region. It appears so. Yeah, very. I don't think you wouldn't. Me and you don't. We don't believe in coincidence.
No,
I don't think it's coincidence that all these bids and the MinRes Street Talk article come out yesterday. You've got the bid for SQM today. I think there's a bit of a rush for control, I think.
There is, and that's why you're seeing a change of control potential change of control for a company that doesn't have a mineral resource yet. And to be completely honest, Matty, like I normally like if you take Wildcat on its just like where it is in terms of stage of company and all that sort of stuff. Like I really struggle to have a sensible conversation about what they've got and what it means for cash flow and all that sort of stuff because it's so early stage and that's just not my wheelhouse.
It's just geology.
Yeah, and the reality is like that doesn't matter anymore for the context of an M&A transaction because there's always pre-resource and we're looking at a potential change of control. So clearly the corporate interest, the corporates have been able to get up the curve far enough where they can take a view on value at a very early stage, and that's in the absence of other market participants, people like me, sort of being capable of getting up the curve to know where that value sits. So it's a sign of times, big time, mate.
Very much so, mate. Now, and continuing on with lithium, even companies that weren't lithium are now lithium developed. EVP, the takeover of Essential Metals. So results of the scheme meeting came through end of last week for Develop to take control of the Pioneer Dome lithium project, which is part of that what we call the Goldfields Lithium Arena in WA. So now remember, money miners, a scheme approval needs a minimum of 75% of the total votes to get through, and 50% of the shareholders that vote by number, 50% of the individuals needs to be greater than that to get approved. So the vote came through at 93% of total shares got voted yes.
Matty, was this the one where the independent expert said it was
so it was
not fair but reasonable? Not fair but reasonable. Yeah,
not fair, but or was it the other way?
Nah, not fair but reasonable.
Yeah. But as we alluded to, that was because of Develop's value management price, premium and valuation. And 78% of the voting shareholders by number voted in favour. So they smoked it. So implementation after the second court hearing, which is scheduled tomorrow, implementation of this scheme will be scheduled for 6th of November. So look, word is going around that Develop's managing director, Mr. Bill Beeman, is now claiming the title Lithium Bill. But following on from his previous years at Northern Star, known as I think it was the Golden Boy.
Who was King of the Goldfields? Is that
King of the Goldfields?
Someone there, King of Kalgoorlie. Someone was King of Kalgoorlie. Was that Bill?
Not. Is that Ashok?
I don't know.
King of Kalgoorlie. No. Now, I think Lithium Bill, there's already a Lithium Joe and Mr. Lithium, and I think we can step it up on money of mine.
What have you got, Matty?
I'm proposing Bill Spodgerbeament. Doesn't that just roll off the tongue?
Spodgerbeament.
Developer Managing Director Bill Spodgerbeament, the new big gun in lithium, pending.
I'd love to see an ASX announcement signed off.
If I can get quoted in an incumbent media source of Bill Spodgerbeament, we're on. So, look, money of mine.
Good work, Matty.
We will be keenly watching this space, I reckon. So, remember, you got a bit happening in and around this region with Mount Marion, Bald Hill, and then you got Liontown's Forgotten Child, Baldania. And look, MinRes, as we said, owned 12.9% of Develop. This will increase a little bit, I think, because MinRes owned 19.55% of Essential. So I'll get a bit of an uptick there. What will Develop's role be with MinRes? We know Mount Marion's looking to go underground. Plenty to play out to see how quickly Pioneer Dome comes online, especially knowing the challenges for water and the like in the region. So, be watching it closely. Exciting.
Very exciting, mate. And you mentioned Liontown's Forgotten Child, Baldania there. Well, I'm keen to – let's have a chat about Liontown.
Lithium again. Jesus Christ, bloody goldwigs are going to be sooking like anything after no gold getting mentioned today. Anyway, here's a live.
So with all of the quality interviews that we uploaded last week, we didn't actually discuss the ultimate funding package that Liontown came out with, and let's have that chat, Matty. They ended up raising $376 million in new equity at $1.80 per share, so that was some way off the $3 per share Albemarle offer price while that was still around.
Well, that's I think you'd say the undisturbed price before all these Albemarle bids come in was about $1.50 for Liontown. I think they got up to $1.80, then $1.50. Then all the hype was from Albemarle bids that were getting knocked back behind closed doors and $3. So I wasn't. It was funny down at my BD experience. Everyone was predicting low twos. I was like, I reckon $1.50 to $1.80 around that range.
Did you? Yeah.
I was bloody right.
I don't, mate.
That was with no word on the decline. But no, I wasn't surprised with the $1.80.
Well done. At the same time as that equity raise happened, they also announced a lending syndicate of 760 million Aussie dollars, which replaces the Aussie $300 million debt facility provided by Ford previously. So there's a few questions I think we should rattle through, Matty. The first one is the size of the funding package. What do we think of it? And I think it's big, but it's probably larger than we expected. But they're now fully funded. You don't expect any more hiccups in the process of building this thing and ramping up because they've got excess funds in the door that provide a bit of padding should things go wrong along the
Well,
way.
yeah, and like when you say padding, it's going to be good to have it with a project of that scale and ramp up and everything. You don't want to be down to your last buck hoping for your first concentrate sale, I don't think. You want a bit of a buffer. We all know about the the technical risk of commissioning a lithium concentrator, especially one of the 3 million tonne scale with flotation included and a paste plan on the back of it. Be good to have a buffer. It's
Big
a
time.
big operation.
It's a sizable buffer versus what what the brokers are sort of modelling they get in the door. So they've gone to a conservative case, but to your point, there's no steeper discount you'll ever do in mining than raising when you're having some hiccups during ramp up. That raise is always so steeply discounted. So they're clearly trying to mitigate the provide enough padding should things not go necessarily as smooth as predicted in the model.
And I'll be interested to see what future growth capital is going to be at this project, because I can't see them doing 3 to 4 million tonne a year via trucks forever. I can see like underground crushing stations and conveyor systems or things of the like to come into that operation in the future.
Right.
So you don't have to rely on 20 trucks going up and down every single day. So and that stuff ain't cheap either to install that. So a lot more capex to come in the future. Whether that's funded by future lithium sales, or if they even ever do it. But I'd say it'd be on the radar.
Yep.
Yeah. Right. What about the Ford facility, Trav? Why have they secured all that debt to replace the Ford facility instead of adding a separate debt facility in addition to the Ford one?
Yeah, and especially given the fact that Ford's debt was like on super attractive terms, the cost of that debt was something you'd never see for a single asset developer getting debt. The debt with Ford was at BBSW plus 1.5% margin. That's remarkably cheap. But
so pretty much just above what the nominal interest rates trending at.
Yeah, it was phenomenal, right? But
they just pretty much wanted to give them the money, just to secure supply.
I mean, 100% felt that way when the deal was done. No one can compete with that, not commercial banks or anything. You know what I mean? So, but
Ford might be happy.
That facility had senior security, which.
So is that saying it's the top level of debt that if everything goes to shit, it gets repaid first?
Exactly right. Yeah. So a senior lender will be highest preference in the capital stack. So if things went tits up, then they get money back first. So it's the highest level of assurance you can have. But yeah. So you look at this new syndicate, and it doesn't actually specify what the cost of debt is in this new syndicate. But I would bet to say that it's a bit north of what Ford's facility was priced. They just quote the new facilities as an attractive margin above BBSY. So I look at it and I think, why did they have to refinance Ford? It's probably getting intercreditors. Like when you have multiple financiers, they've all got to sign this intercreditor agreement where they agree on the ranking of each other and all that sort of stuff. And that stuff is really, really hard to do. My read through on this is that getting Ford to kind of agree to have other lenders rank equally with them may have been challenging or whatnot.
Can you do that?
Yeah,
that's easy enough to do.
Yeah. It's not easy. It's like
because when push comes to shove at the end, it's like, right, are we split pro rata splitting up who we pay first?
When you see people ranking pari passu, that basically means that 100% pro rata kind of. We rank the same based on what we're owed still, and it's just hard to get lenders to agree to things all at the same time. They all have these really complicated credit approvals processes, so it just appears like the simplest thing to do was to refinance that facility, and even if they're paying a higher interest rate on the subsequent one, I still imagine it's not a super high cost facility because you've got the likes of concessional finance there from ECA and CEFC. So
was there any word on Miss Georgina Hope Reinhardt involved in this placement?
Yeah, and this is the thing that caught caught my eye, right? There was no mention of Hancock tipping into the placement on a pro rata basis. No mention of Hancock in those docs at all. And the convention you would normally see when you're doing a big equity raise and you've got a 19.9% shareholder on the register, you normally say that that shareholder is participating on a pro rata basis. And when you think of the dynamics of raising money and you're wall crossing institutions, one of the first questions the institutions are going to ask, they're going to say, "Well, what is Hancock there? Are they in for it?" So Hancock's kind of guidance, whether or not they were contributing on a pro rata basis or not, would have really helped in the price discovery process. If they were like, "Yep, we're there at this price," blah blah blah, it actually would have helped them kind of get a deal done at a less dilutive raising price. So seeing no mention of Hancock is an interesting observation, and I think it leads me to guess that one of three things has happened to you, Matty. One is that Hancock actually did participate on a pro rata basis, but they chose not to disclose this, or Hancock didn't agree for this to be disclosed. I'd find that a bit unusual because, like I said, you normally want to provide some level of reassurance to the market that your major shareholders are still tipping in at this price. The second one is that second possibility is that Hancock wasn't offered stock. So you could imagine a scenario where the board of Liontown take the view that they want to dilute Hancock's interest. They see them as causing a bit of mischief. I'd find this very, very unlikely, to be honest with you, because why would you want to upset the major shareholder on your register? Like, that can cause all sorts of damage, and so I just doubt that this was actually the case. The third option in my head is that Hancock, chose not to participate. So I think of this in the sense of like what are Gina's intentions. We've talked about this a lot, and my prevailing theory, and the one I still believe, is that Gina's intention is for the share price to be as low as possible, for all the reasons we've discussed in the past. And if you think about those dynamics, would Gina have, would she even participate, or would she be early money in the door if she wants that share price to be as low as possible? Because if that's the case, then you hold out until the very end, or you don't participate at all, and that basically lets the ultimate price of the capital raising is done be as low as possible for the wall crossing dynamics we spoke about there.
Is there a sort of a version, a possible second option to option two that you mentioned, that majority of the money just went to close out shorts? Because there was I think we talked about last week, there was potentially about $400 million worth of shorts on, but I think they were nearly 10% shorted. So a lot of the raise would have just closed out shorts, I would have imagined.
The word on the decline I heard about who the money went to was that a lot of the preference in allocating the capital was towards long-only shareholders, and that was a deliberate intention not to place the money to the hedgies who were short, and that's why you saw the offer at $1.80, and then the stock ran as high as nearly $2 over the next 24, 48 hours or whatever of trading that occurred, because the hedgies, in order to close out their shorts, actually had to buy on market to close out their shorts instead of participate in the placement. Hence the share price, the slight sort of short squeeze. It's back down to $1.83 now, but that's kind of one of the dynamics we saw.
Oh, so that was it. So if you know that, it's a bit of an arbitrage on the open. You could make a bit of buck off if you knew that the case.
Yeah.
I just like saying arbitrage. Sounds good. So yeah, there you go. So what do you think of, I guess, the Liontown's board decision to go down this road, the high, I suppose you'd say it's 10%. It's still under their placement capacity, but it's very dilutive equity raise. Tim Gordon participated, but didn't participate to his full pro rata entitlement. So I guess, what do you think of the board's decision to go down this half debt? It's effectively half debt, half equity, because it cancels out the Ford facility.
Well, I sort of zoom out a little bit and think, what decisions did they have before this? So we saw the rhetoric that Albemarle had kind of withdrawn from the process, and that might have been a bit of a joint decision with Liontown, given the complexities to executing a deal. So if you zoom out and think, well, what were the board's two main decisions? Decision one is continue with the scheme, put a scheme implementation deed together with Albemarle, and in those scheme docs, there's a massive break fee that would be payable to Albemarle in the event that a deal doesn't complete. You can put that to shareholders. Or you go this route and sort of, the deal's sort of torn up. You kind of have to address the funding gap with this whole package, be it both debt and equity, and then kind of talk to developing this under your banner. So if those are your two options, I think it makes sense what we've seen eventuate here, because how the hell do you sell a scheme implementation deed to your shareholders on the basis that you don't see a pathway to this completing? You're going to have to pay a big break fee, and then things could look a lot worse even further down the track. So it's a tough decision to have to face, but in the context of the dynamics of the share registry, makes sense.
It's going to be interesting to see, as we harp on about, is what Gina's 20% stake is going to do. If they're just going to wait for ramp up issues and start accumulating at a much lower price. But just remember, we say, look, Gina's got taken a lot of control of Liontown now for other bidders. But then if she wants to do something, remember Tim Goyder's just got as much control over her, plus all his followers as well, to block anything she wants to do as well. So it'd be interesting to see how that dynamic and relationship pans out. It wouldn't be good if the 15% and the 20% shareholder aren't getting along. But for this to actually succeed, they will have to.
Yeah, price can align a lot of incentives, Matty. So yeah,
we're about to find out.
It'll pan out.
Hopefully it could drag on for bloody ever, for all we know.
Yeah.
Thanks for that, Cobber. Beauty. Cheers, Money Miners. Thanks for the sponsors for the day. Our little pitch at the start of the show. If you want to get in touch about partnering with Money of Mine, the most targeted niche audience in the mining and finance industry in Australia, we'd love to chat to you all.
Reach out, and to our existing sponsors, thank you guys, bloody legends at.
They're still here. Yeah, that is a testament. They keep wanting more. I don't think we've had anyone since they've come on. No one's dropped off.
SMEC, K-Drill, Anytime Exploration, JP Search, and Terra Capital, legends.
We're just absolutely loving it. Good fun. Oh, beauty. That was who the sponsors were. You did the rattle off then. I thought you were just, good stuff, Trav. Right, hooroo, Money Miners.
Hooroo.
JD, hope you're all right in Melbourne, Cobber.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.